Hello and welcome to another episode of AB Talks, where we speak to experts sharing insights across key industries in the Middle East. Joining us today, we have Scott Livermore, the ICAEW Economic Advisor and the Chief Economist at Oxford Economics. Thank you for joining us here on the show today, Scott.
Thank you. Pleasure to be here.
A pleasure to have you on the show, Scott. We've begun to already feel the impact of the Russia-Ukraine crisis economically here in the Middle East, with concerns growing around the increase in fuel prices, in oil prices, in wheat prices as well. Do you think the impact of these concerns are going to extend across the weeks to come? And are there any other economic consequences that the Middle East is likely to face in the months to come?
I think that's a really good question. We're in an eye of a crisis, and I think it's fair to say the Russian-Ukraine war is more severe than we really expected in February, both in terms of scale of conflict and how Europe and the US have responded through sanctions, banning certain banks from SWIFT, limiting access from the Central Bank of Russia, and businesses themselves have withdrawn from Russia en masse. And as you said, there's a number of ways it affects us here in the Middle East. I think if you look at the economic impact, there's three main channels. Firstly, there's trade. And in a good sense, in a manufacturing sense, we trade relatively little with the Ukraine and Russia. Clearly, as you mentioned, travel and tourism is important here. Russia, for Dubai, is a top 3 origin market. Ukraine's also in the top 20. So anything that impacts the inflow of tourists will have repercussions for the economy. Secondly, you have financial impacts. We've seen the ruble drop a lot, Russian equities drop a lot. The impact here has been more muted, partly because of oil prices rising well above $100 and remaining there despite coming off peaks. And then the final impact is through commodity prices. And for us in the region and the UAE, it's slightly a double-edged sword. You see a situation where wheat prices have risen a lot, and obviously Ukraine, Russia, important source market for a lot of agricultural commodities. And the UAE and the region imports a lot. So that's going to have a significant inflationary impact. And we've already seen food prices pushing up inflation in the region. But on the other side, we have oil prices, and oil prices are above a level that governments have budgeted on. So they really do have the firepower to potentially offset some of the impact. And if the Russia-Ukraine crisis bites harder than we're expecting and starts to weigh on growth, not so much this year, but into 2023, the governments of the region and the UAE government have the financial means to accelerate the development of their growth and diversification policies and to support the economy more strongly.
Speaking of oil and diversification policies, we've seen major economies here in the Middle East, including the UAE and Saudi, share ambitious net zero targets. While there is a positive movement in that direction, there are still experts who point to the fact that you can't cut what you can't measure. Is there a need for the UAE and the Middle East to measure emissions better on one hand, and on the other hand, what more can we do to cut down these emissions that are measured?
I think some of the policies announced the importance of having ambitious targets and backing it with significant financial means is important, and that's the public sector's contribution. And you can very much see the aims and the ambitions of the UAE public sector. But clearly businesses and the private sector have to make a contribution too. And you make a good point there about measuring emissions. If you let me be a little bit technical, there's probably 3 types of emissions here that you typically measure. So you have Scope 1 emissions, which are the emissions that businesses produce during their operations. Scope 2, the emissions associated with their energy supply. So how polluting is the electricity they use. And then Scope 3, how emissions are generated within the ecosystem they operate in. So how the goods and services are used, how much polluting are there. And probably as important, how much emissions are generated during the supply chain. And I think if you look at that through that kind of holistic lens, Scope 1, Scope 2, so the direct emissions from the power sector, they're relatively easy to measure. However, Scope 3, and for some businesses, this is where most of the emissions are generated, are quite hard to measure and quite difficult. So if you have emissions reporting that excludes Scope 3, then you're clearly underreporting overall emissions from a business. And what businesses really need to do is try to green their own operations, but also the operations of their supply chain. And if they can't measure the pollutants and the emissions from their supply chain, it's very difficult to do. There's tools that allow this. So Oxford Economics has a global sustainability model, which allows you to map emissions through the supply chain and calculate your broader environmental footprint. But we need to encourage businesses to do that. So we need much stronger environmental climate disclosure. There are guidelines and benchmarks. So for example, there's task force on climate-related financial disclosures, which set a framework for financial reporting related to carbon emissions, the risks associated. So far, relatively few UAE companies have signed up to this task force. And I think important in order to set out and highlight how business can contribute and what they have to do to improve their operations to help with these climate change goals, more financial disclosure, stronger reporting is an important step.
Moving away from a macro view of the economy to a micro view to everyday life, the recent reports have suggested that the prices of education, recreation, and transport have increased while the prices of housing, water, and utilities have dropped. Do you have any data that you can share or insights that you can share on what inflation in the UAE and GCC is going to be like in the months to come? What does 2022 and the years ahead have in store?
Sure, and as you rightly point out, we now have inflation again in the UAE after several years of declining prices. In the second half last year, inflation returned positive in the UAE. It's been driven by a number of factors. Partly those sectors that were hit hardest during the COVID crisis, they're rebounding, so transportation, hotels, recreation activities. There's a lot of imported inflation as well, partly related to global supply chains that we hear a lot about, and also about the food prices that are rising strongly and are likely to continue to rise strongly given the Russia-Ukraine crisis. Inflation, the latest data point for the UAE, is around 2.5% inflation. I think it's likely inflation could rise further from here over the coming months, but will subside during the course of the year. And we expect for the year as a whole, inflation in the UAE to be around 2.5%. In the context of the wider GCC, we forecast just slightly higher than 2.5%, so 2.7% inflation for the year as a whole in 2022. Saudi Arabia slightly lower, with the rest of the region above the region average. And inflation is a concern. It squeezes the purchasing power of households. So it means our money goes less far and reduces goods and services we can buy. And also the consumer's going to have to grapple with higher interest rates. We saw the Fed move, we saw the UAE central bank follow, and we're likely to see 175 basis points in interest rates hikes this year. So quite a significant amount of monetary tightening, which will slow the consumer down a little bit. It takes time for these impacts to feed through. So why we're really optimistic for growth this year, we expect non-oil GDP around 4% in 2022. It will be one of the factors, high inflation, tighter monetary policy, that contributes to a slowing of growth to around 2.5% for the non-oil sector next year. But I think it's important to remember a lot of the growth in the economy is coming from the public sector. Mm-hmm. And the public sector has really been quite dynamic to drive the growth and diversification agenda. And with oil prices around $100 a barrel, the government has the resources to really push through with its growth and diversification plans, and potentially to do more if growth slows more than we were expecting.
We have seen investments into the UAE rise over the last few years. In fact, an Oxford Economics report recently suggested that the UAE is among the top in terms of FDI in the region. From expert conversations like this in the past, we've seen this has been driven primarily by infrastructure investments, by private-public partnerships and JVs within the region. Are there any other initiatives like this that could possibly increase investor interest in the UAE and increase FDIs coming into the UAE?
You're right. The UAE is attractive to FDI, and it's an important pillar of its growth strategy over the next decade and beyond. It aims to be a top 10 recipient of FDI by 2030. And while the UAE is becoming more competitive, it's an important policy goal to attract more FDI of the whole region. So the competitive landscape is growing. And I think the authorities here are acutely aware of that. And some of the policies we've seen over the last couple of years have really aided the UAE's competitiveness. And I think in a world where we have a global minimum corporate tax, and typically the theory was you attract FDI by having low tax, which may not be a thing of the past, but tax competitiveness will become less important. Those other factors, such as quality of infrastructure, access to a good quality labour force, ease of doing business within a country, export market potential, strong domestic market, they're all going to be important in attracting FDI. And I think we're seeing the UAE is working on all of these, and it's also working to attract the small and medium-sized investor, not just the massive multinationals. So policies around visa reform, making it easier for people to be here and work here, especially high-skilled labour, will be important to attract investment. Reforms such as 100% onshore ownership of companies, that removes an important barrier that would have deterred some investors. And also just a focus on developing key sectors, whether it's creative industries or digital, that focus and that building up an ecosystem for companies to operate in are all important factors in driving an FDI inflow. And I think there's reasons to be optimistic that the UAE can capture an increasing share of FDI, which will be important when global FDI continues to recover from the COVID crisis.
Thank you once again for joining us on the show today, Scott. It was great having you here.
Thank you for the invite. Really enjoyed the conversation.
Thank you, Scott. And that's a wrap on this episode of AB Talks. Don't forget to comment, like, share, and subscribe for more such videos with experts in the industry. That's all for now, and until next time, goodbye.